Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the low time frame bearish scenario where we are looking for a three-wave structure to the upside for then a continuation to the downside where price will take this double bottom over here at 24.7k. Now Bybit already took this low, making it highly probable that other charts will follow, because usually once a high time frame low or high is taken, the other charts will do the same thing. But as you can see, Coinbase over here did not yet take this low. Now in this particular scenario, you can see I have two counts on my chart, either an A, B and a wave C, or a W, X and then a wave Y. Now for this ABC, this is the low over here for then a 5-3-5 wave move, where preferably this is the high of your wave C and you don't see this wave C broken. Now the wave C over here ended between the 1 and the 1.236, taken from the low to the high to the low over here, which is the most common target area for a wave C. Now for a wave Y over here, the most common target area is also between the 1 and the 1.236, but also the 1.618 is still a target as well, which is hovering at 29.5k. And for a WXY, this is the low over here, because then in wave W, we're having an A, B, C wave for a flat in wave W, double zigzag corrective structure in a wave X, and then we're going to be looking for a three-wave move towards the upside in a wave Y as a zigzag. And over here, you can see the vertical line on the chart. That is a fib time where I compare the time of wave W with the time of wave Y. So the pivots for the trend-based fib time over here taken from this low to the high of W and put it on the low of X, comparing the time of W with Y. And the most common relationship between a wave Y and W is around the 1-to-1. However, also the 0.618 and the 1.618 are common relationships. The 1-to-1 here sitting Friday the 13th of October at 2 p.m. The 1.618 is sitting on Tuesday the 24th of October, 6 p.m. Central European time, by the way, and we are currently on the 0.618, but it is unlikely this is at the moment already the end for wave Y. So for a wave Y, we can still expect a bit of a move to the upside, where then 29k is very, very interesting indeed. Over here, you can see the target box 29.1k to 29.4k, which is definitely a target we have to keep in mind. Also with this move to the downside, which on the very, very low time frames looks better as a three-wave structure than an impulse. And of course, in the bigger trend, being this a 5-3 and then a 5-wave move down, as we're then looking in the bearish scenario for new lows, you want to see impulsive structures from the high to the downside. And if there's a higher probability, this is a three-wave move over here, we can say, okay, there's a higher probability this high will be broken, so a higher probability potentially for this wave Y in a structure like this. Now, if we go to the two bullish scenarios, then we start with the diagonal, and I have some stuff to say here additionally now. So we have 1, 2, 3, 4, 5, right? Wave 2 over here, missing out on the common target for a wave 2 in the diagonal, the golden pocket, 0.5, a little less common. But more importantly, this wave 3 over here tapped the 1-to-1, and yes, on the line chart it did not tap the 1-to-1, but I always use just the candlesticks, by far most common. Also with Elliott waves, wicks are important because it also includes price action, right? And the 1-to-1 should not have been hit for a wave 3. You take the trend-based fib from the low to the high of 1 to the low of 2. Most common target for wave 3 is the 886 and the 786, so that's actually below the 1-to-1, below the high over here. And the 1-to-1 is an invalidation for a diagonal, because wave 3 in a contracting diagonal is not allowed to be longer than wave 1. Then we have to start thinking about expanding diagonals, but these are very rare. And also wave 2 over here for an expanding diagonal is too shallow, because then you really want the golden pocket to be hit as well. So this scenario at the moment for me, not great probabilities, but also in the double 1-2 where you have 1-2, 1-2 and you look for a big move to the upside. In this scenario, you don't really want to see the second wave 1 being longer than the first wave 1, because the second wave 1 is of a lower degree. So usually the second 1 and the second 2 are shorter in price and time compared to the higher degree wave 1 and wave 2, but this second wave 1 tapped the same 1-to-1 here, longer than the first wave 1, making it less likely, lower probabilities. Now another thing that is important is again the vertical line over here, different one this time, as I compare this wave 2 in green to the current wave 2 in blue over here. Now it's important that for a double 1-2 you don't want to see this 1-to-1 broken, because then it starts to become very, very low probabilities. It's already lower probabilities because of what happened here with the second wave 1 being longer. But if price is going to continue ranging over the weekend, well, you see this 1-to-1 is sitting on Sunday the 8th of October 10 a.m. Weekends are known for ranges and not impulses. So if we are looking for a very big wave 3 to the upside in a 1-2, 1-2, and then a big impulsive to the upside in a wave 3, the weekend has to do something magical for this for the probabilities of this scenario to increase. Another thing that is important is we had no bullish CVD here at the low, higher low in price, but not a lower low on the CVD. And when there are high time frame pivot points like this one over here, and we're going to be looking for a big impulse to the upside, I actually like to see bullish CVD divergences. That's by far most common. And if not between these two pivots, I like to see it between these two pivots over here. And we have to wait and see what's going to happen, of course, with the CVD divergences over here between these pivots, but also more locally over here. So if we then zoom out to the psychology scenario that I have been sharing for a while now, I think for the past week or something, this is something so interesting. When price was ranging over here, we got on this idea, right, where, hey, psychology scenario, also known as fake outs as people call them, right, but I like psychology scenario because it's like Elliott Wave scenario, where we have this trend line. What do most beginning traders use? Trend lines and patterns. Now you can trade them very effectively, absolutely, but of course if you are beginning, it's more difficult. You might not have a clear plan and strategy and targets. But what people are looking for is this trend line, right? We have over here hit 1, hit 2. Now we broke the trend line, little backtest one can argue, and we move towards the upside. So what people are looking for, right? They either trade the breakout or they trade the retest. And now what they're looking for is price, of course, moving towards the upside. So they are looking for price to move all the way to new highs at 32K. But what I think is very interesting from a liquidity standpoint as well is to fake the breakout of the trend line and then move to the downside again. So then all the people that are longing in this area, stop losses here, targets here or higher, they are going to be stopped out as price then moves towards the downside to lower targets. And the lower targets are interesting in general over here, where we have great support around 22K, great support around 20K, and then over here around 19K as well. And below the double bottom that we have over here, it's quite a gap to the downside. Now, if we then zoom in to the lower time frames and see what's been going on over here, it's been quite a nice volatile last day of the week. Of course, we had news today as well at 2:30 p.m. Central European time, and it kind of showed, one can say, because this was the candle over here to the downside exactly at the news time as well. Now, what is important is on my chart, I have a double bottom, but on some other charts, this low has been taken. On the Bybit chart, for example, you can see over here, this low has been taken by a wick. And it's the same on the high time frame as here more locally on the lower time frame. The moment that one of those charts wicks below this low over here, like one of the bigger platforms like Bybit, this low has been wicked, it increases the probabilities that other charts will follow. And we literally missed it out by a few dollars over here. Now, I have two scenarios for you where price is in this range over here. I have the bullish scenario, and this is the more ranging scenario, I suppose. So in this particular scenario, we are looking for a 3-wave over here in WXY, or we can be looking for a 535 ABC or a potential flat, right? Those are the options in a range. So you have a 3, 3, and then a 5. But at the moment, I keep an eye on the the ABC over here or the WXY. Mainly because of the price action that we got over here. This move down, this move up, and this move down. I'll explain it in a second because I have some scenarios to explain what I saw over here. Also, we didn't yet hit this daily naked point of control at 28.3K. Now, this is very, very, very important resistance for price at the moment, where price could return to the downside and look for a wave Y or a wave C in a 535 or a 333. Currently, I count this move to the downside here better as a three-wave structure. It's just a higher probability scenario where over here, this is then a wave A, B, and a wave C. That's currently, for me, the best way to count that move to the downside, increasing the probabilities. This is then a W, looking for X and Y. Wave X can also end above the high over here. So even if price takes the high, it can still go down for Y. But that's not something I'm looking for at the moment, honestly. So in this scenario, when we look for a WXY, because wave W in the count is then an ABC zigzag, wave Y is not allowed in a sideways double combo to be a zigzag as well. So Y has to be a triangle or a flat. And I think a flat might be very attractive, that if we can make the high of X somewhere here, right, maybe around the daily naked point of control, then over the weekend, we could be ranging here around that daily naked point of control, move to the downside a little bit, then move to the upside, and then when Monday hits, we basically wick the high created during the weekend or just before, maybe even today, maybe even wick above this one, and then we move down in a wave Y to then grab the liquidity below the double bottom and then move up again for a potential swing failure pattern trade where we wick below, close above, and then we're looking for a move towards the upside. And if we zoom in to that potential wave X, right, for then WXY or ABC. So if we zoom in to X or B, which means this piece of the chart, then this is something I'm looking at. And throughout the day, I've been sending a lot of updates as well, of course, during the news here, because very high volatility. And if we look at this structure over here, then what is important is that if we look at this being a zigzag, so just for a second, let me remove for the confusion. If this is the high and you're looking for an ABC, then this wave C is very short. Most common target for wave C is between the 1 and the 1.236. The 0.618 is very rare. But as you can see, we didn't hit the most common target on my chart. The 1 to the 1.236 has not been tagged, which for me lowers the probabilities. This is a wave C. So what is it then? Well, in that case, I'm thinking about a potential flat for a wave Y. And then over here, we're looking for a zigzag in a wave W, 1, 2, 3, 4, 5, correction, and another 5. So basically 5, 3, 5, zigzag in W. Then we have a flat in X, and then you have another flat in wave Y. So wave Y and W are different in then a sideways double combo. Most common target for wave C, in this being then an A, B, and a wave C to the upside, is between the lower 1.618 and the upper 1.618. But you can also see the 2.618, still a target for a wave C. And what's interesting is that daily naked point of control is right there, right? It's very, very close. Another thing to pay attention to, if people are looking for a very bearish scenario, which is then a wave 1, 2, and looking for downside in a bigger wave 3, just good to know is the price over here, price action hit the 886. So you saw how I pulled it. I pulled the 886 from this high over here to the low. If people are looking for this to be an A or a wave 1, flat for 2, and then a 3 to the downside, of course it's a scenario, but price has hit the 886. And the 886 is a rare target for a wave 2, but a common target for a B or a wave X. And also it just increases the probabilities. You're going to take the now double top over here, but take this high. So the probabilities are higher for price to eventually take this high over here because the 886 has been hit, lowering probabilities for a wave 3 to the downside over here, which is another reason to also look for a more ranging structure over the weekend, and also a ranging structure that goes like this, take the double bottom and then move to the upside. So the daily naked point of control, keep an eye there, and also of course observe the reaction, right? Don't YOLO FOMO or catch knives. Make sure you have a plan over here based on statistics, that you know what you're looking for, CVD divergences, whatever it is, and then potentially you can be looking for downside or here or wherever on the chart, right? Depends on your strategy. Now the more bullish scenario is that this is a W, X, and Y is already finished, but as mentioned, then Y has to be a zigzag, and we have a very short C. This wave C over here did not hit the wave C target area because it's lower. It did, however, hit the 0.618 taken from the high to the low of W to the high of X, which is a target for wave Y, but I'm just not happy with the sub-degree count of this wave Y, which for me increases the probabilities, we will at least see downside once more, that we at least take the double bottom here once more. We can go up, no problem. The probability wise, it's higher to at least take the double bottom once more and then potentially see that move towards the upside. Of course, that means that throughout the weekend, something like this can happen. But in this particular scenario, at least, we are then looking for this to be the low, and we're looking for impulsive structures to the upside in a 1, 2, 3, 4, 5, right? We look for new highs, basically. Now, if you look at the CVD divergences, this bearish CVD divergence, one can argue, played out. On my chart, this low has not been taken, but on Bybit, it has been taken. So you can say, okay, well, the bearish CVD divergence played out. So I will remove that one from my chart after this video. And more locally, this was interesting. We had over here bullish and bearish CVD divergences, but especially for the scalpers, after this high was taken and the bearish CVD is invalidated, we had some nice bullish CVD divergences right there. So this is the 3-minute chart, and you can see over here that price over here took this high with that little wick, and then the bearish CVD divergences are inactive. CVD is back to neutral, but then you had this higher low in price and you had lower low on the yellow CVD, which is a bullish CVD divergence, and then the pump came for. So for the scalpers, of course, CVD is an amazing tool, especially using those lower time frame CVD divergences. So if we then go to the probabilities of the different scenarios on the low time frame, the bearish scenarios for me, based on Elliott Wave theory, because it's not what I prefer, it's just what Elliott Wave theory gives us as probabilities, right? How price is moving. Probabilities from an Elliott Wave, Elliott Wave background are higher for price to still move towards the downside, where this move to the upside is part of a corrective structure and we still see new lows and take the double bottom. It's very important for the bulls to flip 29k, and then one could potentially look for upside. But at the moment, also with the scenarios, the two bullish scenarios as explained over here, the diagonal and the double 1-2, they simply currently don't look as good because of some invalidations, right? Like some things that are just not 100%. And if we zoom in on the micro, as shown, currently the probabilities are higher. We continue ranging over here throughout the weekend in the scenario as explained, looking for that daily naked point of control, looking for that double bottom, for then potentially a range like this. And then eventually maybe a move to the upside for then wave Y, hitting 29k, reject, and a move down. But that's of course still very hypothetical. We have to wait and see what price does. But based on Elliott waves, the probabilities are higher for these two moves. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.